Hi, welcome back. You're with your stocks. Looking good for the market, but a lot of earnings reactions in focus. Philips Carbon Black came out with numbers just a short while back, and the stock is up about 3.5%, 4% on the back of what looks like another good quarter. Q1, remember, was very strong for them. Sanjiv Goenka, the chairman of Philips Carbon Black, now joins in. Hi, Mr. Goenka. Good afternoon to you, sir. Looks like another good quarter this time around. To begin with, can you tell us what the capacity utilization has been this time around?
Well, we've pretty much, based on our product mix, we've been pretty close to 100% capacity utilization. And I think as far as we're concerned, the cost-cutting measures have been paying off, and you see that reflected in the bottom lines. We've had a significant reduction in finance costs, which is a result of a combination of multiple things. And all these have contributed very, very positively to the bottom line. Of course, backed on the significant growth in sales, which is about 18%.
So what were the volumes this time around as well? And if you could tell us what the breakup was between domestic and exports?
Exports were static. It was domestic volumes which grew up by 18%.
Just to take that point forward, sir, what is the outlook in the export market, and what have the pricing trends been like? Because if I'm looking at the performance, top-line growth has still been elusive, though operationally the company has done very well, and that reduction in finance costs that you spoke about, that's been substantial year on year, which is why the net profit number is looking so good. So if you could just explain to us the pricing trends and the outlook on volumes, particularly for the export markets.
You know, I think I'm going to approach it slightly differently. The domestic market, the selling prices are sort of governed by the raw material prices. Given that oil fell and crude fell and carbon black feedstock fell, the raw material prices came down significantly. As a result of which, revenues as an absolute number went down, but sales volumes were up by 18%. Exports look very promising. But because the domestic market was so buoyant, we sort of focused more on the domestic market this quarter, as we will do in the next quarter as well.
Sir, what about pricing trends in the domestic market? And also, what's the sort of mix between domestic and exports that you're hoping to achieve by the end of this fiscal?
We roughly do 25,000 tons of sales in the domestic market, and we do about 8,000 tons in the export markets.
So I remember FY15, FY16, there were some concerns regarding your working capital cycle. What's that? How is it looking now?
It's looking very, very much more healthier. And I think in the past we were importing raw materials for 6 months and 8 months. We are now importing it on a just-in-time basis. So just what is on the high seas is what is imported. So we don't carry any additional inventory. And payments from the tire companies have improved. So overall, the working capital position is significantly better than it was.
All right, Mr. Goenka, we have to address many numbers, so unfortunately we have to cut this short. Thanks very much, sir, for your time this afternoon, and all the very best for the rest of FY17. So that's the word coming in from the management of Philips Carbon Black, but we have to address Bajaj Electrical's earnings now. They came out earlier today and looking a bit weak, actually. Shekhar Bajaj, the chairman and managing director of the group, now joins in.